Good morning, everybody. How's everyone doing? Today is, of course, Thursday, December 1. Brand new start of a month. It's a brand new month here, and we're kicking off the month strong, jumping right in with some PCE inflation data, right? So on the economic calendar, you can see clear as day. Right here, 8:30, which is in about 10 minutes, we'll be getting the PCE price index, which, as we know, is what the Fed usually looks at as a measure of inflation. The forecast is that we'll be off about 20 basis points, 0.2%, from the previous reading at 0.5, right? And the trend that we want to see continue here is inflation coming down. Jerome Powell was fairly, let's just use the word dovish. We'll use the word dovish yesterday in his speech, so to speak, and was almost explaining inflation and saying, oh, this is kind of why it happened. We're over the hurdles that caused it. We're seeing some improvements in the numbers where we need to see the improvements. And if this misses, if this comes in hotter than expected this morning, that's probably going to be a big blow to the market, just based on how dovish Jerome Powell was yesterday. I mean, this would be clear evidence in the wrong direction if the numbers come out and they don't align with what he was saying, right? So this will be very important to watch. And again, about 8 minutes now, we'll be getting those numbers. We can see the current trend for this has been lower, right? You can see we've got a couple of high reads here, and then we did move lower in the last month, but we would like to see that continue to move lower, right? So we're looking for a 0.3, which would bring us back down to these levels right here, all right? So that's ultimately what we're looking for from PCE. We need to hit the expectation. Even better would be beating it. I don't know if that happens, but ultimately that's what the market is looking for. All right, that's PCE. Then we're going to, at the same time, be getting unemployment claims as well as PMI at 10 o'clock. 10 o'clock will be PMI. I really think that the PCE index will move the market more so than the PMI. I think this will be the determining factor. If PCE hits the expectation or is better than the expectation, market stays bullish. If we miss, we probably start to roll over and retrace some of the structure from yesterday, and then this is not as meaningful. All right? That's what I see happening on this morning session. Could be right, could be wrong. All I know is that this number wants to hit or beat expectations. Otherwise, it's not going to be great for the market. What do we see from Friday's session? Again, we'll be live at 8:15 tomorrow to catch it all happening. We've got hourly earnings, NFP, the true number. Remember that this is the ADP preview. And then we'll get the unemployment rate. All right, so a very stacked morning tomorrow as well. You know, kicking off December, guns blazing, right? We're coming hot and heavy into December. So what we'll do is we will just quickly drag this, something like this, and let's go ahead and make this a 5-minute chart. We just want to be able to see what this reaction is in the corner of our eye as we're going through the remainder of the presentation. All right, there it is. So in the background, as you guys know, over there on the right, we just have this is just for anyone new, right? We have the ES futures, and that's basically the equivalent of your S&P 500. All right? So that's what we'll be watching for the reaction in. As we know, it's all about PCE, PCE, PCE. We'll give this screen a refresh once 8:30 rolls around in about 6 minutes, but for now, let's see what we've got for stock-specific headlines. What do we have? Broke and down to one credit card, SBF, right? Claiming he's committed no fraud. I don't know about that, buddy. I did read somewhere online that he's got $100K in a bank account. So the joke was, $100K in one credit card? Seems like the average person, right? Not that the average person has $100K in savings, but the stats would say that the average person does not. have 100K in savings. But what I'm getting at, right, is that, he should be in a lot deeper doo-doo than 100K in one credit card, right? He should be behind bars, basically, based on how all of this fraud has been playing out. Anyways, what else do we see here? Kroger hikes the forecast after stronger grocery sales. So that's a positive upgrade for consumer staples. Futures are near flat after Wednesday's rally. That is true. Downgrade to Victoria's Secret. Oh no. No lingerie for the holidays, I suppose. All right, so a downgrade out there. Be aware of that. I don't know if anyone tuned in, but Elon Musk had the Neuralink stream last night where he was demoing some of the product and some of the hurdles that they're trying to overcome. Kind of cool. Biggest movers pre-market, designer brands, right? We just saw that. Land's End, Salesforce. Remember that Salesforce was an earnings candidate, and we also had Snowflake yesterday, which kind of moved a little bit counter to expectations. What else? Stock-specific headlines. GoodRx is a buy, so an upgrade from Citi on GoodRx, so healthcare, saying that it can move 60%. That seems a bit aggressive in the current market context, but hey, an upgrade's an upgrade. So an upgrade and a downgrade so far. What else? Stock-specific stuff. Amazon CEO says Prime could become a standalone business and stands by the layoffs that they've given. Interesting. That'd be, kind of, if they did a spin-off of Prime, I just wonder what that would look like for Amazon overall, right? What else? Recall on almost 500,000 Tesla cars in China. Interesting. Salesforce CEO steps down, right? Co-CEO, I should say. Powell, again, this was the big news yesterday. This is why the market was moving. Interest rate hikes will be slowing down with the possibility, very likely, of a 50 basis point rate hike in the upcoming meeting. All right, so the market liked that yesterday. Netflix CEO slowed down advertising because he was focused on Google and Facebook. What else? More drama between Musk and Cook. And that's it. So overall, interest rate hikes slowing down. We've got a upgrade from Citi to GoodRx. And we've got up at the top JP Morgan downgrading lingerie for the holiday season. All right. Those are the big deals, at least that I can see here from a news perspective. What do we see on the earnings calendar? As we know, yesterday was Snowflake after the close. Salesforce, right? What else do we have here? Dollar General and Kroger before the open. And if anything, you probably want to watch Marvel after the close today. Right? That's where I would give my attention. Anything else, not all that great of a mover. All right? So that is what we've got on the earnings calendar. That's what we've got on the economic calendar. We've managed to eat up about 2 of those minutes. We checked in at 8:26. We've got 8:28 on the clock, and we're just waiting patiently for those PCE numbers to come out. So in the meantime, why don't we take a look at Snowflake? Let's come on over here. Let me load this screen up, and we'll go to Snow. What's going on with Snowflake? Okay, so a big counter move, right? Big downdraft in Snow, and then a rally back higher, right back up towards the sort of midpoint of the move. So not really doing anything all that impressive, just back inside of the prior day's range. We're not gapping anywhere down here. You can see all these old levels. Haven't traded Snow in quite some time. It's not a favorite of mine. It's not a regular that I keep eyes on. So I'm not seeing anything that I would like to do here based on this daily setup. Nothing about this strikes me as obvious. All right. So back to the ES. We've got about 45 seconds to go until we get some sort of reaction, hopefully from the market here on the PCE numbers. And of course, what we'll do is we'll hold this on the side. We'll go back over here and we'll just prepare with a quick refresh. That way we can, hopefully it gives us the buttons. Perfect. All right, so 30 seconds to go. We'll request the actual right here and we'll go from there. All right. So patience will pay. Any movement starting to unfold in the ES? A little bit of back and forth here, but nothing crazy just yet. About 10 seconds to go till the numbers release. Starting to see some volatility just back and forth here. No big move yet. And then here we go. Boom. Numbers are out. And we'll give this a refresh. ES starting to push around a little bit. Big move lower. Did we miss or did we hit? Let's see. Come on. Give us the refresh here. Come on. Let's go with the hard refresh on the site. Try again. All right. So unemployment claims, okay. But what's the PCE? Give us the PCE. Come on. Can someone drop it in the chat? Because this clearly is not cooperating. I'm sure someone knows out in the chat. I imagine, based on what's going on here, a little bit of a dipsy-do and now higher. I imagine it's at the expectation or possibly better. That would be what I would think, but this is just clearly not cooperating. What's going on here? Refresh. Come on. Play nicely. Play nicely. David Investor says it hit the expectation of 0.3. Yeah, is it not refreshing for anyone else either? So two people saying it was 0.3. Marini, I see. Carp is saying 0.2 and 0.3. Lower than the expectation. 0.2, 0.2. I'm seeing lots of 0.2s. 0.2, 0.2. All right, so it seems the consensus is 0.2. I'm going to give this one last try. If it doesn't, okay, there we go. Look at that, beautiful. So it's playing nicely. This is exactly what Jerome Powell wanted to see. All right, this is incredibly bullish for the market, right? This confirms exactly what Jerome Powell was saying in yesterday's speech here, and this is not making him look foolish, and he does not have to eat his own words here on this morning session. So this is a great number. This is a great read to see. We want to be underneath that expectation, and the market, as you can clearly see, is responding favorably to that, which, again, this makes sense based on what we were just discussing, right? So even though unemployment claims went down, which remember, this going down technically would be an indication that more people have jobs. The Fed's been watching the jobs market very closely, saying that the labor market's slightly too tight, right? So this is not what they want to see. They do want to see, unfortunately, right, a reasonable balance in the jobs market, right? So, which is it's a tough balance, right? Because you want to see unemployment claims reflecting a tighter jobs market, but as they were saying, the job openings, right, are still high. So it's the push and pull between here and here, right? But, all of that kind of goes out the window when you get a 0.2 instead of the forecast 0.3. Pretty bullish, right? Pretty bullish. And the market's responding favorably, right? So overall, PCE looks good for the market. This confirms what Jerome Powell was saying in yesterday's speech. So the market is content with continuing its move in the upward direction. Let's take a look at these ES futures now and see what's going on from our time frame perspective. So we'll continue to let the dust settle just a bit here in the ES. This, of course, is the 4-hour time frame chart, and PCE came in better than the expectation at 0.2. And I'm just going to leave this on the screen here. That's not PCEV, that's PCE check. Better than expectation at 0.2. We'll leave this here for just a moment, let the dust settle a little bit more, and we'll see who's in the chat this morning. So, scrolling all the way on up to the top. Who do we have kicking us off this morning? Who was it? Nick Farrell. Good morning to you, sir. Thank you for dropping a GM. Good morning to you. We've got Cy, Raz, the original Rude Boy, Jay Hicks, Chloe, NECA. We've got Swipe 650, Steve V, Pete and Repeat, classic. Johnny Whitaker's in the building. We've got Live Better, Daniel. We've got Ross Muir, Jay Yachts. We've got Slick Messy, Stevie J. Tunes. We've got Mr. B, Ben Simmons, Mickey Moodaman. I'm Pectoric. We've got Jeep for Life, Roger Tutt, Leaf Floating on a Lake, LA, Ty A. Ramus. We've got Flip MD. What else? Jose. We've got Jay Cortina, James Young, Sharath, Omar, Warshawn, Coldest Blade. Good morning. I'll get back to your DM, by the way, on today's session. I did see that. Sammy Campbell, Harold, D. Walker, new to stock, Gino, Sandman, Wesley, Aaron, Andrew Harrington. We've got Joel Clark, G Money. We've got all the regulars. Thank you guys for tuning in. Just going to grab all the remainder of the Let's see. Green names. That's what I'm looking for. Wow. Mind blank. Crypto Commando, Almost Davy Day Trader, Hedwig. We've got Raz, Jay with the gold cash bag, Stargazer, Ramona, Chris Higgins, Ty. Who else? I think that's it. Thank you guys for jumping on the responses when we weren't getting the refresh as well. Greatly appreciated. So, all right. Good morning. So let's move into our ES 4-hour time frame chart. Alex Dickinson, I see you as well. Green name, of course. Lows, higher lows, higher lows, higher lows, higher lows, higher high, right? Higher high. So we can afford some sort of pullback here and still not be in jeopardy of losing the 4-hour uptrend. All right. So we're all good here on the 4-hour chart. Things look all right. I'm not seeing any risk of trend change that would really require coming down underneath this low here, which was where Jerome Powell started speaking yesterday at 1:30. Based on the confirming PCE, again, it doesn't seem like that's a highly probable situation, retracing all of the move and then breaking it for something that looks like this. When and if that were to happen, of course, we will change our tone underneath this area, right? The prior low of day, 1950. We'll consider changing our tone, but only if we come down underneath that level, because what that would indicate, right, would be sort of a look above and fail, number one, and then a lower low. Okay, so that would be a big sign of a trend change. I'm not seeing any signs of it currently, again, with the PCE confirming the move from yesterday. I'm just pointing out where things start to shift on the 4-hour. So overall, remaining bullish on the 4-hour. In terms of structure, though, right, I don't think we'll be able to see it. We won't be able to see it, I know for a fact here, on our ES contract specific. But if we go to the continuous contract and we look at our, let's go back to the daily, right? Here's the daily time frame chart. Of course, everybody and their sister is talking about, and rightfully so, right? It's an important metric. Everybody and their sister's talking about this trend line, right? Anchor, all-time high, rejection, possible, is it possible that we get a rejection for a higher low pullback here after the higher low, a reattempt could possibly break it, right? So it's something to be very mindful of on today's session, that we're sitting up here at this known area of resistance. Do you want to be pressing the bet in the upward direction? I would just say that the risk reward starts to become slightly skewed up here, right? So we can't see this resistance trend line on the ES Z22 because we get all this. I guess actually you can kind of draw in a line that would look like this. We can draw the rough area, right? Something that looks like this is kind of in play. This, very sloppy here in terms of how the data came in, of course, but regardless, you get the gist that this is the trend line, right? So let's go back to the 4-hour and just see again how we're resolving that. We're kind of through it. Right now, but we're just sitting right at that trend line. I wouldn't call this a definitive break. I would just say, we're sitting at this area of resistance. So a number one priority is that, at least on the 4-hour chart, right, is that we are still in a strong uptrend here, producing a new higher high. However, the risk reward is not great for finding positions that look for continuation. Remember that whenever we're trying to trade an uptrend, there's generally speaking two things that we want to do. We want to buy higher low pullbacks, or we want to buy equal high breakouts. All right. And currently, when you're giving yourself that higher high, that does not align with a higher low pullback, and that does not align with an equal high breakout. So your risk reward isn't great up here is what I'm getting at. Okay. So be mindful of that on the higher time frame charts. Let's take a look at the hourly. What else can we learn about this structure from the hourly? So this was the level that was ultimately, it did look bearish. I will fully admit early in the session, this was not looking great with this price acceptance underneath, but the fact that the sellers didn't really push it underneath the Tuesday low here, I don't want to say it was a giveaway because of course it was just bearish consolidation underneath our zone, which had been prior support, right? We've been talking about this zone for a while. So it did look bearish, but anything happens with a data release news conference from Jerome Powell, I mean, you can't argue with that price action. So overall, hourly chart has broken out of this range, right? This is kind of the range that we were watching. We've certainly gotten a break of the top. Now, did we double the range is the question, and I would say just about, yeah. So the target, whenever you break a range, is always to exit. So this trade is also complete in terms of looking for that target to be hit. Kind of unfortunate that it happened under the circumstances that it did, but hey, that's the market. We've got to deal the hand that we're dealt. So overall, again, I'm just trying to continue to build the argument that, hey, up here, our risk reward is not necessarily favorable for new money longs. All right. That continues to show itself here on the hourly as well. Let's take a look at the 15-minute time frame chart. What's going on the 15 that we can interpret from this wild move, right? So overall, we'll just stick to the 3 questions. We'll keep it very simple. Where are we opening in relationship to the prior day's range? Here's the low. Here's the high. Of course, we're opening now after PCE on a slight gap up. So that entire move, the buyers are still not done, and we're gapping up. So that is a bullish piece of information. Question number 2, where are we opening in relationship to the overnight range? Here's the overnight low. We, of course, have to adjust our overnight high. So let's do that now together. Let us activate you. Pop that to its rightful place. And you can see the overnight high is up here. We're opening much closer to the overnight high than the overnight low, which is, again, a bullish piece of information, but most importantly, does set up solid risk reward for a possible gap fill on today's session, right? If we're going to reverse here and pull back, opening closer to the overnight high does leave room for good risk reward. Stop goes over the top, entry through the open, target here. All right, we'll talk about gap rules momentarily, but question number 2 does strike me as a good location. Question number 3, last but certainly not least, what is the overnight inventory position? The settlement is basically the high of day yesterday. How much time was spent above? How much time was spent below? You'll note that here, 50%, slightly more bullish, slightly more bearish. And then with this current move happening, it's right back to just about 50-50. All right, so we don't have a huge skew in the overnight inventory. Right, I'm not seeing, based on this activity underneath the settlement print, I'm not seeing like 100% net long activity. As a matter of fact, again, this is probably closer to just like 60% net long. All right, so what I'm getting at is that here, we don't have not all of the odds are stacked in our favor for some sort of gap fill, right? A retracement back lower. So the 3 questions. Number 1 is telling us that, yes, there is possibility for early morning trade as opposed to being patient. We'll talk about gap rules in just a second. Number 2 is telling us that, yes, gap rules will be in play and will be solid because we're against that overnight high. And question number 3 is saying, all right, gap rules might be in play, but hey, maybe just tone it down a little bit because we're not 100% net long. We're only like 60% skewed net long. All right? So gap rules, what are they? I'm sure everyone wants to know. Everyone's dying to know the secret. What's the secret? Here's the secret, right? There is no secret. The secret is that this gives us a framework to enter some trades sooner rather than later. So here's what I would be watching for. Let me remove this bubble because I find it very annoying. There we go. So if we open here and fail to accept over the overnight high, of course, we're looking for a retracement through the opening print to close the gap to the prior high of day. As we said, because we're up against this overnight high, it allows tight risk reward, right? It allows tight risk reward just in time for a bot to come join the chat. Let me go ahead and remove that. Maybe that's the secret, right? The secret is that we just get bots. All right. Anyways, back down to business. Back down to brass tacks. The secret is if you open here, fail to take out the overnight high, and trade lower through the opening print, you've got a decent risk reward trade on your hands. This probably looks closer to like 2 to 1, maybe 2.5 to 1, right? Risk reward ratio. So this would be reasonable to look for. And again, the premise of why this trade works is that you can see here on the news announcement, you've got longs piling in with poor location. They will be the first ones to close out if we do not accept above the overnight high because they're positioned poorly. They will be immediately underwater if we start to pull back, right? If we are underneath the opening print, the longs who are positioned up here with the worst trade location will or should, if they're short-term traders, which generally overnight players are, right? They should start to close out, causing this move to the downside, right? Usually when we get economic data, like when CPI comes out, for example, CPI will have a huge volume spike that's usually on par with like regular trading hours volume. Yeah, not happening here with PCE. So I wouldn't really read into this and say, oh no, this is, significant pre-market activity where hedge funds are getting active here. Not really, not really. The hedge funds, I mean, clear as day, and anyone who was trying to allocate capital yesterday, I mean, look at the volume here. If I just scroll back, I mean, this is normal ES. This is what happened as Jerome Powell was speaking, right? Almost 2x the normal volume. So you want to talk about, big money getting active? It's here, all right? It's not here, okay? So regardless, the gap rules will be in play this morning. We just walked through them very briefly. Open, failure over the overnight high, short through the opening print, trade to here, stop over the high of day, over the overnight high. As long as this risk reward makes sense, good to go looking for that setup, right? Now, one thing that we could say is counter to the gap being in play for a fill here today is the fact that we technically have a spike in the market profile. Now, I want you, before we go talk about the spike on the market profile, let's just remember what I was saying on the 4-hour and the hourly chart. Remember that this dotted line right here, I know it's probably faint to see on the screen, it's light gray. That's the daily resistance trend line, right? It's over here. We're poking through that. We're getting a little bit, dare I say it, extended through that resistance trend line. All right, so be mindful of that before you take into consideration what I'm about to say in terms of spike rules, okay? So here's the market profile. Spike rules would tell us that, number one, here is the spike, by the way. It's just a single print session into the close of the day, right? The market did not have enough time to determine whether or not it would accept these prices or reject these prices or continue, right? The only reason that the market stopped here is because the market closed. 4 p.m. came around the corner and the market closed. That's the only reason that the market stopped here, okay? So because of that, we have a spike. The spike rules would tell us that if we open above the spike, we are looking for the market to continue to auction higher until we find sellers, right? So that's counter to the gap rules. So what does that mean? Well, if we open up here today and we do get price acceptance above the overnight high, remember your spike rules and that the market probably wants to auction higher to try to find new sellers, right? So if on the open we do not fail the overnight high, meaning come back down underneath, then remember the spike rules. Market will try to go higher. If the gap starts to unfold and we move into the spike, remember that we'll learn something right here. If we fall back down into the spike, the market is likely going to chop around in the spike to try to determine whether or not we will get price acceptance in this area. Okay? So, overall, spike rules in play, gap rules in play. It might be a tricky open to navigate. I'm not entirely sure. Again, we have these frameworks to use to help hopefully make our jobs slightly easier. And just to boil it back down to very simple outcomes here, let's do it on the candlestick chart, right? If we get something that does this and starts to do that, remember spike rules, SR. Spike rules in play, market's trying to auction higher. If we do something that looks like this, and we fail that overnight high, move lower through the open, this should be a target. What is that? That's GR, gap rules in play. Okay, so two things this morning that are going to help navigate what takes place, and it really centers all around the overnight high. Acceptance above, spike rules, underneath, gap rules. Target should be here. If we move higher, we'll have to search for a target on the hourly momentarily. We'll do that together. But the next phase of gap rules, right, is a gap fill reversal. That's essentially the top of the spike. If we never move into the spike, that's telling us, again, that we should look for higher prices. If we accept into the prior day's range, I would chalk it up to chop. Two-sided nonsense back and forth through the upper spike here, essentially, right? So that's what I've got for you on the ES this morning in terms of scenarios and situations. Overnight high is your most important level to be watching. I can't be any more clear about that. Overnight high will help dictate what takes place here. Spike rules, gap rules, all right? We've got them both. Currently, as we're speaking, right, we're getting a little bit of a pullback here, a little bit of a retracement of that PCE move, but we're still opening on a gap. This, now, right, because we're not as close to that overnight high, let's be very clear about this. the risk reward is not favorable to take the short here if you're going to place a stop over the overnight high, right? So we'll check back in on this closer to 9:15 towards the end of the stream here. But overall, that's what I'm seeing in the ES. Before we go ahead and take the poll, I just want to look for an upper target here on the hourly chart with you together. So what are we seeing here for possible areas of resistance over the overnight high? It's going to be clear as day right about here. All right. Oops. What do we have? Wrong tool. Wrong tool. Let's actually use that tool. What we'll do is we'll draw in a zone because that is slightly, I don't want to say misaligned, but if we do something like that, that's an upper range. And then, of course, from in here as well is another range to be thinking about. All right, so those two gray bars represent where we should be looking. Let's go back to the 15, and we'll just throw on our extended hours. Good. And let's see where those numbers are. First zone, 41.40. 41.40. If we just get blatant continuation of this market, 41.40 should be on your radar. And then after that, we know there's a much higher target, right? I'm not calling for this at all on today's session. That would be like asking for the same repeat of yesterday's move, right? I don't think that's going to happen, but that's roughly 42.20, all right? Overall, again, just zooming back into the 15-minute chart, we'll take our poll here as well. What we're kind of expecting for the morning session, is that going to work? Yeah, there we go. What we're expecting for the morning session is gap rules and spike rules to be in play. Okay, so here we go. If you're bullish on today's session, if you think we're going to go like this, chop around in between overnight high, prior high of day, but basically hold the gap up and then break out, possibly move up towards this 41.40. Let's see a number 1 in the chat. If you're a little bit more neutral, thinking that we might, fail the overnight high, come back down into range, lower high, but just kind of chop around above the spike. The spike, by the way, is right here, right? 40.40, 40.45. As long as we're above 40.45, that's kind of your more neutral number 2 situation for the day. And then, of course, bears want to see this thing go to hell in a handbasket here, maybe dead cat bounce, lower highs underneath, and rotate back down towards the lows. Let's see a number 3 if you're rooting for that outcome. Okay, so you've got 1s on the bullish breakout and continuation, 2s on the neutral chop up here but above and staying contained within the spike, and you've got 3s on the breakdown of the spike, 40.45, for a move back down into the sort of bulk of yesterday's session. All right? If you've got no idea what's going to unfold here, a number 4 will suffice. Number 4 will do. All right, let's see a number 4 if you don't know. I'll type in the official YouTube poll as we wait for some responses there. Now would be a great time for me to remind you that the like button is also free to hit. So what do you think? It's free to hit the like button, and it goes a long way to show some support for the channel. Bullish. Let's go number 2. Neutral. Let's go number 3. Bearish. And number 4. No clue. All right. Official YouTube poll is out there in the world. And we're going to let that simmer for just a moment here. Just a moment. In the meantime, I'm going to scroll up, see if we've got any questions, comments, concerns before we dove into the analysis. All right. Ape Man, good morning to you. Who else? Empower, good morning. Donald Lee. John Cardozo, good morning. Siege, of course. Who's reporting today in terms of earnings? We covered earnings already. You can just rewind the video and check that out, hee. Let's see who else. That's it, really. That's it. After that, we're just directly into some chat responses for the poll, which is awesome to see. Coldest Blade kicking us off strong with a number 1 on the day's session. Number 1 on the day's session, thinking that we go for the gap fill and reverse off of it for move back higher. Abel with the number 2 and Joel Clark with the number 3 and Raz with the number 4. I am very impressed, guys. We got all 4 chat responses in a row at the very beginning of the poll. We've got Coldest Blade number 1. We've got Abel number 2. We've got Joel Clark number 3. And we've got Raz number 4 directly in a row. I mean, maybe I'm just getting excited about stupid stuff, but I don't know. I think that's kind of cool. I think that's kind of funny and cool. Anyways, What else do we have for chat responses? As I scroll down, I'm seeing lots of 1s and 2s, a couple of 3s sprinkled in there as well, but lots of 1s, honestly. Lots of 1s, 1s and 2s, 1s and 2s. A lot of people saying just, maybe a little bit of a pump higher and then some chop. But 1s seem to be the dominating factor here as I'm scrolling through the chat, right? A couple of 3s as I get lower in the list, but primarily just 1s. And I mean, the official YouTube poll that you can click on has a 47% response rate to bullish. And remember, with 4 options, a 47% response rate is pretty dominating across 4 options, right? So a lot of people falling into the bull category here today. I don't want to be the counter indicator, but I'm just very, very skeptical around this resistance trend line, right? Could it break? It absolutely could break, but in terms of risk reward up here, I've got to find a higher stop. I've got to find somewhere to place a stop before I'm going to get involved with a number 1 scenario. I mean, ideally, right, as we pointed out from a situation perspective, some chop here and then a break. Okay, maybe we can use a low of day setup. Maybe we can use some like sort of pre-break candle low and then do something like this, right? Our risk reward's kind of here, right? So, I definitely agree that momentum is strong. It's here in the market. We're threatening a break of the resistance trend line from the daily, but it's got to offer a tight risk reward setup up here before I'm interested in looking for longs and continuation into that 4140. I'm just trying to be very mindful of, all things considered as well. Let's just do this. Let's go back to the SPY daily chart. SPY daily chart is always going to offer a little bit more clarity. Of course, this is the cash ETF. And there's no contract changes here, but here's the resistance trend line. Here's the weekly expected move high. Here's the gap close. Here's prior resistance, right? I'm just trying to be very mindful that all of this is stacked up as resistance right here. So yes, there is strong momentum. Yes, we are opening on a very slight gap up, which is also bullish, but we're gapping and we're running right into this overhead resistance. And as we've pointed out on the 4-hour time frame chart, right, when you've got all of this higher low sequence and now you've got your higher high, the ideal entry was really the equal high breakout over 403. And, I don't say this to, I'm not saying this to tell everybody who answered number 1 in the chat to, hey, go back on your decision, turn into a bear. I'm not saying that. I'm not saying be bearish here. I'm just saying as we're looking for upside moves, just be very mindful of your risk reward, right? Because if we do see a liquidation break, this could very easily be on the table at 40.40, right? So if we're thinking about entries here, right, and our target's up here, let me just draw it as a box actually, and our risk of a liquidation break brings us there, then you darn well better have a really good stop loss either somewhere here. Even better would be, tighter to that, right? You've got to have a stop here to protect yourself from this downside move if we see a liquidation break on today's session, right? Coming into all of this overhead resistance. So hopefully that was useful. I want you guys to stay. It sounds stupid and trite and overused, but I mean it quite literally. Like, stay safe when you're trading and use a stop loss. Identify where the structure changes and where, hey, you probably should not, you should no longer be in that trade, right? So make sure you're protecting your downside here, especially as we're headed into what seems to be a treacherous area on the SPY daily chart, right? So that's all. Let's move over now to the NQ and see what's going on with our good friend NASDAQ. Taking a look at the 4-hour chart, what's going on with the 4-hour? This is the continuous contract, so I don't really have any issues with looking for the trend line on this. Let's go daily just to see. And we're not near it, by the way, in the NQ, right? If you do something like this from your high, like that, we're not quite as close to it as the ES, right? So I'm not as concerned with this trend line offering immediate resistance, whereas the ES is obviously right there. Okay, so that's the NQ trend line. But back down to the 4-hour to talk about trend, right? Here's your balance range. You do now have lows, higher lows. This was an equal low, I'd say, on the 4-hour. And now you've got an equal high. So the trend at best here is neutral, all right? I'm not quite willing to say that the NASDAQ is as cleanly in an uptrend, but if we can crack this high and get some acceptance over that, sure. Higher high, yes. Uptrend, confirmed higher lows, here to here, HL, here to here, HH, right? Good to go. Uptrend confirmed. So NASDAQ, neutral until proven otherwise. I would look at this as a new range that's been established. I mean, it's very clear that we rejected right around this area, okay? Hourly chart for a little bit more clarity. What's going on the hourly? Oops, a little bit too much of a zoom. Let's go back to something that looks like that, possibly. Good. So again, here's that sideways range. Lows have been holding so far. Straight shot move right to the top of the balance. Remember, whenever you make a move wall to wall, 100% retracement, don't be surprised if you get a little bit of a pullback. Where would we want to see hold? Roughly about 50% of that range, right? That would be your clean higher low. Anything that's above 11.8 at this point in time strikes me as being reasonable. Some prior areas that people are probably paying attention to would be right around this zone as well, which is 11.9. You can see prior rejections in here. That was that shortened holiday session, right? This was the day before, last Wednesday. And in the past, we had a rejection there, kind of chopped through it in the pre-market regardless. You'll just note that there's some structure around 11.9. So a deeper pullback that violates your overnight low could very well go to the 11.9 figure, which is also the value area high, okay? So knowing that, let's go to the 15-minute chart, and we'll look at the structure here. So very, 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 very similar to what we were just discussing in the ES, right? Here's essentially the spike in the NQ. If we fail the overnight high, move back down into range, sure, you're essentially looking for the base of the spike, which would be here. And you'll learn something if you support at the base of the spike or if you reject and move through it. So overall, 11.9, I would just treat this as kind of a zone right here because we've got value area low 10 points underneath, 11.9, right around this area. If the market pulls back, you want to look for a higher low here. That would keep the trend intact. That would not be, too much give back. And on the hourly, we could look for this trend to develop in the upward direction. All right, so that's your NQ pullback. If we get, shallower, just, this and then break out, okay, now, as we know, just like in the ES, what do we have in play? SR, spike rules. Market's going to try to auction higher and find new sellers at some undetermined location. But hopefully we've got at least an idea based on the trend line and this upper level, right? They could come in around 12.2. 12.2 is the next major area, 12.2 in the NASDAQ. Okay, so I would watch that on upside if we get continuation or price acceptance above the overnight high and do something like that. All right, so that's the NQ in terms of the three questions, very similar to the ES. Yes, opening on, at least as of right now, very, very small, like microscopic gap up. I would just say we're opening at the prior high of day, so not really a gap. Gap rules won't be in play from that perspective. Question number 2, off the overnight high, not as attractive for gap fade. Question number 3, inventory is roughly mixed, right? 50-50 net long, net short. So nothing all that different in the NQ. It's really how do we resolve overnight high and how do we resolve this area on a deeper pullback around 11.9. So those are the two areas for the NASDAQ. Next up, /RTY. What's going on with Russell? Let's go daily. Let's see if we've got that trend line, right? So trend line, I'm just going to use the sketch tool here because this is broken clearly. This is broken. Actually, what am I saying? That is not broken. Apologies. Boom, 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 boom. Russell at the trend line, right? This is, though, a little bit more of an interesting setup. This is a more interesting setup because, we'll put in the official trend line. Coming from here, boom, looking like that. This is a more interesting setup because we've already tested the trend line once here. Higher low pullback, testing again. If anything's going to be the first to break through the trend line with some solid power, I would imagine it's the Russell after putting in a higher low pullback and looking for something like this. Right? If this was going to be a stronger rejection off of the trend line, the trend should have changed on this pullback here or on this attempt here after the lower high. It just simply didn't happen. So Russell, to me, trend line touch, but this time after a higher low, looks more likely that this will happen as opposed to this. Now, don't get me wrong, we will change our tone when we have to, but based on the daily time frame, if this is the range, if this is the last high or low, then we're not changing our tone, and this won't become a double top, 1 and 2, unless we break down underneath this zone right here, the prior low of day, which again, based on the strong buy response yesterday, the good volume supporting it, I would say more likely than not, we would look for a higher low pullback again and a reattempt or just a break in the first place. So Russell 4-hour, going to be very similar, right? Same idea. You'll notice that this to this is an equal low. We took this out, so now we have a higher high from here to here, equal high from here to here. So 4-hour trend is neutral. It's no longer really in risk for a big lower high look like this and a breakdown of the equal lows. We're also nowhere close to this area anymore. Again, we'll change our tone if we have to underneath the prior low of day. But based on the current look, let's go to the hourly. Continue to get more nuanced, right? We're just stuck in a range. Here is the range. Remember what we just said about the NASDAQ. Whenever you go wall to wall, lower to upper, could be upper to lower as well. You generally look for a pullback or a dead cat bounce on the opposite end of the range. So a pullback would want to hold at this point. You can see this level clear as day, 1875 roughly. 1875, 1870, a pullback off of the trend line for that, another, quote unquote, another higher low situation for the break would want to hold 1870. So watch Russell into 1870 on the hourly time frame chart. That would be fulfilling and finding a HL, keeping us in a at least neutral trend, if not uptrend, if you want to count from here to here and from here to here, right? That's really a little bit more nuanced. I would look for a 15 or a 30-minute trend in that case. But regardless, what do we see in the Russell on a 15-minute chart? Let's adjust our overnight high to where it rightfully belongs. Good. And what we're noticing here is very similar to everything we've discussed so far. So I'm not going to beat the dead horse. Primary area of interest on the pullback, as we just described, 1870, 1875, coming from the spike area right here. Oops, sorry, right there. Boom. That's the deeper pullback level for something that does this. Consolidation at the highs and a break of the overnight high. That's just going to be your daily break of the resistance trend line after putting in the daily higher low, right? So Russell looks okay here. As we were describing in the prior videos, it used to be a yellow flag. Now it's not even a yellow flag. It's just, I don't even know if it's a flag for the market currently. It's just hanging in there. It's doing what it needs to do. That's the Russell. Let's take a quick spin through the cash indexes, and we'll do the core list of companies as well. SPY, it's going to be, the psychology here, no change from the ES that we were just talking about. Coming into very heavy overhead resistance around this 408, let's call it 408.50 up to 410. About a 2-point range up here, right, where you're going to run into some heavy overhead resistance. We're making a new higher high. It's not ideal to be active with new money longs. In terms of the levels to be watching for, let's take a look here. The spike base is going to be around your 403.50. 403.50, this is essentially where the spike ends, right? There's your level. So 403.50 on the downside pullback if we accept in the prior day's range. If we accept outside of the prior day's range and over the overnight high, remember that spike rules are telling us we should start to auction higher. Just be very careful with your risk reward. Okay, very, very careful with your risk reward here in the SPY. What's a little bit more attractive is along in the QQQ. Why is the QQQ more attractive? Well, look left here. We certainly don't have any or as much meaningful overhead resistance. And as we were just pointing out with the trend line, right, if we do something like this, coming from your high, going something like that, we've got some room to run into that trend line. We're not butting our heads into it on this morning session. So QQQ does look slightly more attractive for longs. How would you play the long? Well, pull back. The deepest one you want to see is 290.50. And just acceptance over the upper edge of the weekly expected move above 290.50 here. Sorry, not 290.50. What am I saying? Over 294.62. This overnight high prior to the PCE move, right? Acceptance here, bullish. Look for continuation, kind of like a gap and go situation. Again, better risk reward here, but you still need to have a tight stop. Low of day, whatever flag setup unfolds here on the open, something has to offer you tight risk reward here on the open in the QQQ. So again, levels to watch. As long as we're above this area here, let's call it 294.25. Above 294.25, bullish price acceptance. Look for higher pullbacks into the prior day's range. 290.50 is where you want to look for that higher low to come in. Right, spike base. If we move lower than that, thin structure, right? Expect a little bit more serious selling pressure, but one step at a time here. The markets do look, at least currently, to be holding up just fine. The PCE data is supporting the idea that, yes, we can move higher. IWM, we just talked about the Russell and what's going on from a trend line perspective here. Scrunch this up, put it in there. So boom, right? A little bit more room to run in the Russell as well to get to that trend line. Overall, this is probably I would be more neutral in the Russell. Again, go back and watch last night's video. I was pretty explicit about the three back-to-back. IWM, neutral. QQQ, bullish. SPY, probably hesitant just based on being at all that resistance. That's how I would line the three up. So IWM, QQQ, SPY. All right. The levels, though, just to give you the numbers here in IWM, 186 is your pullback level. Holding above that is bullish. It's also 186 is kind of stacked up around this neckline area, right? So that makes sense for something that does this. And then acceptance over the overnight high over 188.25, 188.25. All right. Apple, what's going on with Apple? Pushing into this balance range here on the daily time frame chart. Remember that in last night's video I was saying, not in love with this Apple up here. If anything, I think that a failure back down underneath 147, 65 is more interesting for a short setup, to be honest, right? This is still overhead supply. If we reject that overhead supply, look for lower through some of this thin structure. I don't know entirely how the setup will unfold, but I'm watching for kind of a more of a rejection look up here as opposed to price acceptance. Of course, that's subject to change, and if it never breaks down and gets acceptance underneath 147.65, there's no short to be had. You're not trying to short into this large green-bodied bar without a setup. But if there's a setup here that offers a clear and obvious change in tone that this is rejecting the overhead supply that we were just talking about, all of these long positions who want to get out for break even, that's what I'm looking for. All right, pretty tough to play into this with longs. Could this just continue on its upward ascent? Absolutely. But in terms of finding the risk reward, I'm not seeing it. Not seeing it. Next up is Netflix. What's going on with Netflix? Same idea. I feel like I'm echoing a lot of the sentiment from last night's video. So if you're not watching those midweek market updates, I would encourage you to do so. But regardless, Netflix, nothing has really changed here for the open. We're opening above 303, so bulls need price acceptance here to confirm that we're staying outside of the original range. Bears will take advantage through the thin structure, likely on a pullback underneath 303. So watch 303. Ideally, the lowest pullback we get would be 292.50 for a daily higher low, low, higher low, higher low. And then maybe over the course of time, we set up some sort of ascending triangle up and over this resistance to close the remainder of that way, way back earnings gap, right? So Netflix, watch 303. That would be ideal for bulls to continue this. And if we break down under 303, very likely a pullback could bring us all the way to 292.50. Next up is Tesla. Impressive day yesterday, yes, and gapping up on this morning session, yes. But let's not forget, we're still in a downtrend, right? We've got lower highs, lower lows on the daily. We've got a sort of possible inverted head and shoulders if we get a pullback. Now, we're already gapping up and over the level to 198, somewhere in here. So inverted head and shoulders isn't quite in play yet, and we're just extending through the top of this range. So Tesla overall, I would watch for a pullback, honestly. Being in an overall daily downtrend, being extended through the top of the range here, I would watch for gap rules to be in play on Tesla, right? So failing the overnight high, look to close the gap, 194.85. When and if we get here, that's where you can look for possible gap fill reversal or acceptance in the prior day's range. Okay, now it's a patience play. If we do something like this, fade off into the prior day's range, let it unfold, see if we do something like this over time, and then we've got our inverted head and shoulders. Right, so I think patience is the play in Tesla, but gap rules will be in play sooner rather than later here this morning. Google, right? Some would make the argument that this type of thing is going on here. Not in love with it. I think that the gap overhead is the primary focus, or should be at least. We're opening inside the prior day's range, or at least right on the prior high of day. So watch your pullback to $100.10. That to me would be ideal holding there, then rotating higher to close the gap up towards 103. All right, so that's what I would watch for in Google. You want to see it stay above that $100 mark, especially noting that that's the spike area as well. That would be bullish confirmation. If we fall out of the spike and back down underneath that original gap area from here, notice that was the prior high that we were looking at. I just think that it's a little bit trickier. It's trickier to trade through this area. If we hold up at 98.54, I suppose that's okay. Over time, we might do something like this, but intraday, wouldn't really want to get overly aggressive bullish if we're underneath 100. So 100, 110, whatever you want to call it, acceptance above, looking for rotation back up to that 103, cracking to the downside, kind of off the table in this zone. Next up, Meta. What's going on with Zuckerberg's fantasy land? Again, the idea is the same. Very difficult to play into a strong green bar like this without some sort of early morning pullback first that offers tighter risk reward. But overall, you should be focused on this gap here, 118.50 up to 128.40. 50 SMA is going to be barreling down on us as well. In terms of pullback levels, where's the spike level? 117. Pullbacks above 117 are most optimal for meta. Anything deeper than 117, thin structure, can probably move lower than you think. Lower than you think through that, right? So that's meta. Next up is NVIDIA. NVIDIA looks great, honestly. This chart to me is probably the most tradable of them all, just because, yes, solid green bar, and again, yes, right into this resistance, kind of if you want to count this as like a consolidation range, right? But overall, the relative strength here makes me feel much more comfortable thinking of this as a bull flag as opposed to some of the others. So a break of this, possibly looking for 200 SMA, 178.50, pullback levels, excuse me, starting to get to that time. Pullback levels 165.50 would be interesting on the downside. That's your spike, right? So there's the spike. That's the base of the spike. Overnight low coming in sooner than that at 168 would be even more bullish. Even more bullish if we respect the overnight low, right? So that's kind of where my head's at for NVIDIA. I like the chart setup. Even if we pull back to 162.50, respect that level there. It's a daily higher low. We're possibly building out one of those situations like this, kind of like what we described in Netflix, right? So overall, NVIDIA, liking the look of this chart just based on the overall structure and relative strength. Probably a favored chart to be watching. Microsoft, and then and then Amazon. We got to get out of here. Wow. Microsoft also looks fantastic because there's two very obvious places that we could pull back and still remain in a trend right here and here. So 250.75 on the pullback is like the most optimal. It's retracing some of this thin structure. We're not opening as firmly on a gap or close to the prior high of day as some other things. So I would watch Microsoft here off of 250.75. And then underneath that, 247.50, which there's no structure intraday around that, but obviously that's the range highs from this little balance area right here. So Microsoft, I like looking at Microsoft for pullbacks to this or pullbacks to this. I'm really interested at 250.75 and 247.50. That would be my watch. If it just continues here to the upside, might be like a balloon floating away, a little bit tough to catch. Depends on how the intraday unfolds, of course. But if let's just say that we get something like this, right? We talked about this last night. If we get blatant continuation and overextension from Microsoft, there might be a short on the gap close in 200 SMA, right? For a little bit of a pullback. Okay. The trend will certainly be up. Don't get me wrong. Trend will be up. But if we get the proper sequence of candles up there being extended like this, we might be able to catch a pullback. Okay. Last but not least, the mini beast, Amazon. Then we'll take a brief look at the chat and we'll call it at that. Amazon still stuck in this range right here. We talked about this last night as well. So I'm really liking what I'm seeing in Amazon in terms of looking for continuation. I'm not as concerned with this chart because we do not have overextension. We're just at the top of the balance range here. And the balance range really isn't even that large. I suppose, don't get me wrong. This is still about 10%, right? About 10%, $100 stock. About, let's just round off, right? I suppose it's less than 10%. Maybe it's like 6%. It's a solid move, but the market's content. The market knows this area in Amazon. So if we move outside of it, you could reasonably expect some price exploration, maybe retesting that 101, maybe retesting the bottom of the gap. So I like Amazon where it currently sits. I'm not concerned with it being quote unquote extended. If it does pull back, you want to see it hold 95 quarter. 95.25 would be a line in the sand pullback area here. Spike base, right? So it's all about spike bases today. In terms of pullbacks, getting continuation, just make sure you've got tight risk reward. That's pretty much a summary of most things that we've looked at, right? Let's go back to the ES on, we want to slash there. Let's go with a slash. Good. Let's just make sure things haven't changed too much from this perspective. No, right? So we're still opening on a slight gap up in the midpoint of the overnight range gap area though. So just be mindful that your risk reward is not necessarily favorable for gap rules. I'll probably leave you guys with that, right? Not favorable for gap rules to be an actual trade unless there's a very obvious something that does this. But look at your y-axis here as I'm zoomed in. This is a 5-point y-axis. So do you really think that the market's going to give you a clean, 2-point upper wick, move through the open and, close the gap? It's likely going to happen far too fast. The time frame is just wrong. The scale is wrong for that trade to kind of unfold. If you're quick draw McGraw off the open, so be it. But I'm not seeing the obvious the obvious move, right? So risk reward's not favored for the fade. Just be mindful that the inventory correction can happen. The gap fade can happen, even if the risk reward isn't favorable. All right. Quick scan of the chat, and then we're out of here. The voice is obviously running out of steam. Scott, yes, PCE was announced at 8:30. Long since announced. What else? What else? Any other questions, comments, concerns? Is this a bull trap? There's only one way to find out. Only one way to find out. Go full portfolio long on the open, and you'll find out. Anything else? Anything else? Anything else? So hard overbought. We need a cool down. Yeah, I could agree with that. The irrational exuberance is so sad. Ajax, you're just jaded because you're probably short. You know, and I say that out of love. I really do. I mean, how can you argue with the price action? You just can't argue with a move like this. Call it irrational or not. I mean, you can't argue with it. It printed. What are you going to do? Get a time machine and rewind the clock? You just can't do it, right? So no reason to be overly bearish in an overall uptrend, right? I think that's going to be it. That's going to be it. That is going to be it. It was not Chris, it was not a newsletter. It was just a video that was posted to the channel last night. Scott, PCE came in better than expectations at 0.2. 0.2. 0.2, 0.2, 0.2. All right. Cool, guys. Thank you for tuning in. On your way out, if you don't mind hitting the thumbs up button, it goes a long way to show a little bit of support for the stream. I'm going to head out now, grab a new fresh cup of tea. It's been great the past couple of days. Thank you guys all as well for the recommendations on the sore throat. It's like I've got my own little community of, as INF would call it, community healers, or the village shamans. Anyways, I'm out of here. Have a green trading day, all, and I'll catch you in the next one.